Good day everyone, welcome to a new update. Today another market review, tomorrow morning something technical related or something about the stock markets, I don't know yet. And another market review. We have witnessed a pretty substantial move and volatile move in the previous days, but overall the structure is still upwards. So I don't get it why people all of a sudden start to become bearish, like immediately. And what I tend to do is always check a chart without any lines of me on it. You have to understand that the more you put on a chart, the more the more you don't understand from the chart itself. What I mean by that is that if you just the ultimate goal is to read a chart by not having anything on the chart, so you could just read a naked chart. And yes, the chart does not look all great because of this heavy move over here, but overall we are still making nice higher lows, and right now we are doing pretty much fine. Yes, we are inside the short-term resistance, we'll get to that, but overall we are just grinding upwards and we are just doing okay. We are still in an uptrend since March 12th. And I am a strong believer of the fact that we have witnessed a market shakeout to the downside over here. If it's a whale move, the easiest way to piss everyone off is take the highs here without any retrace. And since this move, altcoins have been doing really well. Altcoins have been outperforming. And I expect more altcoins to follow, as I've been saying in the previous period, that I'm more interested in altcoins as they are far behind Bitcoin. Bitcoin is already at the levels of February 2018, April 2018, while Ethereum is still down 85% or 80% from the highs. And not even going to discuss the rest of the altcoins. So this structure does look bad for the first fact, as it's just maybe a rising wedge structure, but to me it's just a liquidity tap above the high in which we continue to range over here. Yes, we could make another drop to 9.1, but overall we're just trending to the upside. We've witnessed similar structures over here in which rejection occurred, after that continuation to the sideways, and just a continuation of the upwards trend. If the trend is lost, then we can start shorting the bounces, but for now the trend is up, and in an upwards trend buying the dip is just one of the best strategies. So what we see on the chart here is that I'll just switch to one that we have been posting a lot about, and yes, it's a little bit sketchy with like many lines on it. I'll just delete a little bit of it. Is that we have a range high, we have a range low, we have a crucial area around 9.3, and 9.3 is holding. We've stated yesterday that one of the scenarios is that we rally upwards towards 9.8 area, 9.7.5, 9.8, which we've done right now, through which the question becomes whether we can break through that resistance level, and if we do, we can just continue grinding to the upside. Less likely, it's more likely that we get one more drop down and test the 9.3 zone for support, or at least start to move sideways in the range again. As long as this area around here holds for support, I'm just expecting further upwards momentum to occur. If we get a move like this in which we make a heavy drop and then reject 9.3, I'm going to assume we're going to test the 7.5k zones, or at least the liquidity below the range low. But for now we are just back in the range with a very ugly move, and there is not much to say further about it. We've seen that, for instance, Tezos has been making rallies towards the previous high already. As you can see, it made a drop, immediately came back, and now it starts to consolidate. Looks quite good, also just making higher lows constantly. As long as we remain above 285, 290, I'm going to assume that we're taking further upwards momentum, and I'm assuming we're going to rally towards 320, 330, and might be even going further towards the range highs. And as you can see, since March 12th, the trend is up. Buying the dip is the strategy you want, and it's the most profitable one. You have to understand that you can make more money upwards than downwards, as downwards the money is limited unless you use leverage. So I'm still focused on buying the dip. If we check Ethereum, for instance, we can see that we are still inside a range resistance area, preferably entry around 212 to 218. I doubt we will get it, but if we get it, I'm going to be interested. Well, probably the majority of the people will become bearish. But overall, I'm suspecting that Ethereum is going to make a higher high and a higher low afterwards. So in the coming months, I'm suspecting Ethereum to continue rallying. I wouldn't even be surprised if we hit 480 to 550. If we get an entry at around 212 to 80 would be nice, but in general, I suspect that we won't even get below 225. If the more times we tap the resistance, I'm assuming we're going to get a weaker resistance, and after like 2 or 3 tests, a breakout occurs. Just like Cardano, I don't expect 280 to be the resistance zone. I expect 330 to be the resistance zone. So it's general and healthy to have a consolidation for Ethereum here, in which we've seen the same over here, and it just gets momentum and strength to continue to make the next move to the upside. Then we've got Cardano, which is still doing very strong movements. I've discussed that it's not an entry right now, and you want to see the higher time frame retrace before you're touching it. Still an interest zone around 6.5 cents. Next interest zone is around 7 cents. Even if we get towards 5-6, we would still have higher lows. It's currently into resistance zone, as you can see. This area is resistance zone. If we break above, I'm suspecting 10 cents. But for now, I'm not shorting, nor am I longing it. In strong upwards trends, the coin can overshoot to the upside, which makes it hard for you to short. I prefer to see a lower high and then take the short. But overall, I'm focused on buying the dip, and given that ADA already moved and many other majors are looking identical to Cardano, I'm looking for other opportunities which are easier to take and provide a higher risk-reward ratio. Then many questions have been about Stellar. Well, we see that Stellar is making itself ready for a move, yes. 100 day, 200 day providing support, we've discussed it. We might see some more consolidation to maybe this 800 set zone, but if we get something like this, take the high, break above, flip the 900 sets level for support, I'm suspecting we're going to continue towards the next level around 1250 satoshis. Similar structure actually on the USDT chart, as you can see. Resistance tapped, resistance tapped, resistance tapped, fourth test. Took the liquidity on the downside, and now we're moving above the 100 day, 200 day moving average, in which you don't want to lose this if it's a bull market and bull territory. So we might see some more consolidation here above 7.7 cents. But if we consolidate, start to test this level more, I expect a breaker to the upside, in which between 11 and 12 cents is my next level. Main level is around 14.5 cents. And why I'm suspecting that we can see continuation to the upside? Well, I'm just getting back to length. You can see that it broke above the 100 day and 200 day MA, and since then buying the dip has been the game. And it's up 2500% and looks likely for another move. Probably it starts to rally towards 1100 sets. Would you have expected that to happen in this period? No. But in this period nobody is discussing your coin. And you have got a long time to accumulate that asset. But at this moment, the only people who want to join or what they want to buy is coins that are moving. And lesson number 1 is you don't buy coins that are moving, because you can get screwed with your portfolio. And in the end, it's all about your own portfolio. It's the same with the equity markets right now. Every Hans and Anja, Frederick, Patrick, with their mom want to buy equity. And what do they want to buy? Tech stocks. Why on earth would you want to buy tech stocks? There is no risk reward on the upside except for inflation, and if inflation occurs, you're better off by not having stocks. just something else that is moving harder than the inflation. So lesson number 1, you've got months to buy your altcoins that are in accumulation. I've been sharing some of them on Twitter already. And if they start to move and you're not in, you don't have any reason to start complaining. If you want to join them, wait for a higher time frame retrace to occur. So we've discussed Cardano, XLM, we've discussed Ethereum, we've discussed Bitcoin. Link is doing the exact same thing. I mean, if we hold here above, what is this? This is Tesla, sorry. If we hold above 285 high time frame, we can just continue grinding. As you can see over here, we've done the same. So unless you can see a breakdown to the downside, lower highs, bearish retest, and then you can start becoming bearish on certain assets. But the momentum is good. If you like this video, if you like my monologue, if you like my tips, please subscribe, like this video. Reply, check me on Twitter. There's much more content coming up. There's a website coming up for the group. There are webinars, workshops coming up. Courses are coming up. I'm so excited for everything, and I'm excited for the market. Thanks for watching, and I'll see you tomorrow twice.